for free consultation at 408-805-4653 or visit nagarajhomes.com. You're listening to Real Estate Roundup. Real Estate Roundup with Realtor Nagaraj Annaiah every Sunday from 12:30 p.m. to 1 p.m. PST on Poly 92.3 FM.
Good afternoon, everyone, and welcome to the show. It's 12:30 p.m. and you're tuning into another exciting episode with me, myself, Realtor Nagaraj Annaiah. Today, we have a special guest, Subrata Shah, joining us to discuss a critical topic that's on everyone's mind, real estate and insurance. As many of you know, home insurance costs in California have been skyrocketing and it's leaving the homeowners with a lot of concerns. Will Californians ever be able to afford a insurance? And what happens if you can't get a home insurance? These are some of the questions we'll be tackling today. If you have any questions about the Bay Area real estate, home insurance, feel free to give us a call. Our studio lines are open at 877 Bolly 92. 877 Bolly 92. Now let's get started. Hello, Subrata. Sure. Welcome to the show.
Hi, Nagraj. Thank you so much for having me on your show, and it is always a pleasure. Thank you.
Yeah. Listeners, if you have any questions on the Bay Area real estate or a home insurance, give us a call. If you recently bought a house and your home insurance is too high, and you're planning to buy a house and would like to understand what is the process of buying a house, you can give us a call. Our studio line numbers are 877 Bolly 92. Subrata, one important question is, right? Why have home insurance premiums in California increased so dramatically over the last few years?
Sure. I think I think that's top of mind question for everybody, Nagraj.
I think some of them have turned on the microphone. Can you turn it off, Aaron? Looks like we have received the call. Can you turn off the microphone? Yeah. Go ahead, Subrata. Sorry for that.
Great. So yeah, I was saying that it's top of mind question for everybody, whether it is a realtor or a home buyer, or even myself as an insurance agent, because I own a home and I pay insurance for everything that I have, all my assets. So coming to your question, why it is skyrocketing and why it is a challenge in California, I think we all know the natural disasters that happen in California every year, right? So as we speak right now, there are probably at least 5 fires going on somewhere in California right now. So that caused a lot of a lot of claims in the last several years. A lot of the small, mid-size insurance providers, companies, they have they were bound to left California. They're not providing coverage in California anymore. So that's one of the reasons. The second reason is all we have been affected by the inflation overall, right? The cost of construction of a home, the cost of labor, the cost of material. So I think with all of these 2 or 3 significant changes in the last few years have really limited the insurance providers to provide the good coverage that we all had before. So it's becoming more and more challenging these days in California.
So fire is one of the contributing factor. Listeners, yesterday night there was an earthquake for 4.2 magnitude. Did you ever face it yesterday? It was in the midnight.
Well, I haven't. I don't know. I think I slept early last night, but yes, we do feel earthquakes. At least once or twice in a year, and I think that's again one of the concerns that a lot of my clients have. What if we have a major event coming up in the future, which is again top of mind for everybody? What if there is a massive scale earthquake? So anyway, we can address that as well going forward if needed.
Yeah, I think, yesterday night I was like, all of a sudden I woke up like house was shaking in, correct? Reason we should talk about the earthquake insurance also. Is it necessary to buy earthquake insurance? What do you suggest for your clients, Subrata?
The good thing about earthquake and in California rules is that it is not mandatory for you to have earthquake. It is a good to have for your peace of mind, for your 100% coverage, in case if there's something happens. However, there are areas within the Bay Area where I would always recommend to go for an earthquake policy along with your homeowners insurance. So you can look up, you can Google, such areas And also it depends on the construction year of the home. If it is too old of a construction, I think you should always, and if you're in a belt where there's, a specific area is more prone.
Yeah, I think well said. Like the way to look out the data, not only at Google, most of the times when they buy the house, they have a national hazard disclosure. Okay. The national hazard disclosure will give them the information, is the house in the flood zone, houses in
Yes.
earthquake zone, or like what it is prone for it, and like even the fire hazard zone. So that is a good indicators if somebody wants to buy a house in that area.
Absolutely. So fire is always needed. So without a fire insurance, you cannot really buy a home if there is a mortgage to it, right? The
Okay.
second is the flood zone. So the flood zone is something that is mandatory. So if it is a particular threshold that requires a flood insurance, your mortgage will ask you for a companion flood insurance along with your homeowner's insurance. However, the earthquake is never mandatory, no matter which zone you are in. So
Mhm.
earthquake is always a personal choice for you to go
Mhm.
whether you want it or not. But flood and fire are mandatory when it comes to those belts if a house falls in a flood
Yeah.
zone.
Listeners, myself, Bay Area Realtor Nagaraj Annaiah, and I'm talking to Subrata San. Today we're discussing about very important topic, the home insurance. Why the home insurance are so expensive, and if we don't get, I think the next conversation would be like, if you don't get a home insurance, what do you do? That's what we are going to talk about. And if you have any questions on the Bay Area real estate, and if you want to know more about your auto insurance or like your home insurance, you can give us a call. Our studio line numbers are 877 Bali 92. It's easy to remember, 877 Bali 92. So, Subrata, like, first is like, if somebody is paying a high home insurance, how do they lower their payments? What they do about, like, do you have any suggestions for that?
Yeah, some of the quick things that I always recommend my clients, and you can always reach out to me in my, whether you can call me or text me if you have any question. But some of the things is you really go through your coverages in detail with your agent,
Mm-hmm.
and there might be some of the coverages which may not be necessary for you at this time. So once you get into your home, you have a better understanding of your home. You kind of feel the what are some of the top necessity when it comes to risks, right? So
Okay.
number one, you can limit those unnecessary coverages for now when the market is so high in terms of insurance cost, and you can
Mm-hmm.
always add them back when the cost goes down in the future. Number two, deductible is some of the things that I also recommend.
Mm-hmm.
Based on your appetite of risk, you can always look into modifying or adjusting your deductible. That will influence the cost, to a great extent for home.
Okay.
And also, I think some of the uh, some of the devices. For example, if you have water leakage device installed in your home,
Deductions. Okay.
or some of the other devices which makes the home more protective, that gives additional discounts as well from some of the providers. Like I do have farmers and also some of the other providers that I work with.
Mm-hmm.
We always provide specific discounts on each and every item that you add onto your home.
Okay. So one important thing, right? Like for example, whoever bought a house in San Jose 20, 25 years, or like maybe 20 years back, they're turning into like 50s, 60s when they turn closer, right? They think San Jose is too hot to stay. They want to buy houses in Palo Alto or maybe closer to even Mountain View. Have you like reason is like the temperatures are like when you go closer to the Bay Area or to the closer to San Francisco, right? The temperatures cools down.
Yes,
Yes. So that's why a lot of people that's why I tell you that's why I tell a lot of listeners, depending on the stages of where they're buying the house, right? Maybe you're younger, the San Jose, Santa Clara might works out. But when you're getting older, correct, maybe they should look around the houses like which are closer to the bay so that way the temperatures might be cooler down because bodies might be not be adjusting to all the temperatures around.
absolutely. So there's a saying that every 5 miles towards the bay, you
Yeah.
get about 5 degrees less. right? In terms of temperature. So absolutely, I think, we should all look at, based on your preference, age, and health. I think we should always look for, which specific areas do provide us, better health
The
and better
reason I brought into
satisfaction
this
in home.
topic is like when you're investing in the properties around, or when you're planning to buy a properties in different stages of their lives, plan based on your needs. Don't get in all in at one place. For example, you bought something in Tracy, Dublin. No, no, don't stick on to it. Maybe try to explore in a different areas. Again, depends on your income needs. And so that, depending on your requirements also, but plan accordingly based on that. Now, coming back to the insurance stuff, right? Like, for example, a lot of homeowners are getting insurances denied.
Yes.
So, what do they do in these cases? Like, if the home insurance gets denied, what is their next steps now, Subrata?
Sure. So I'll give you two examples. Now, number one is a lot of the existing homeowners,
Mm-hmm.
their providers are canceling their renewal every day. So I had a customer call in yesterday
Mm-hmm.
from San Ramon, one of the best places to live in, and
Mm-hmm.
their insurance got canceled, not renewing. So I was able to help them with some options. And remember, again, I always do have more than one option for you, no matter where your home is, no matter which fire zone your home is in,
Mm-hmm.
right? The other situation is when you are going for purchasing a new home, sometimes based on the value of the home, or sometimes based on where the home is located, many of the providers will say no to your to provide you home insurance, right? So
Yep.
again, we do have options for that. One of the things that I wanted to mention is something called California Fair Plan. So
Fair
California
plan.
Fair Plan, yeah. So
Okay.
it's called CA Fair Plan, and they are bound to give you fire hazard insurance no matter what, no matter where your home is, no matter how expensive, or what is the condition of the home. So please remember that whenever you have any insurance got canceled or you are denied, you always have Fair Plan to give you temporary coverage for fire hazard, right? Now, the key aspect about Fair Plan is that Fair Plan only covers fire hazard, which is
Only
mandatory
fire
for
hazard. Okay.
only fire hazard, not any other uh, perils or risks, right? So
Mm-hmm.
for that, that's why it's called a companion coverage or a companion policy. So we
Mm-hmm.
do work with clients where we, you know, um, for an urgency to close the home, we provide safe fair plan and then work in the background to find something which can give you additional coverage for any other risk for your home.
Okay. So, if listeners, if your home insurance got denied recently, then you look for the fair plan. Look in the California website, as Subrata mentioned. That's a way to go about it, because even is it like possible even for the home insurance prices are like going up? They can go for afford for the this fair plan, or is only when the home insurance are getting denied they can go for it?
No, you can actually go for safe fair plan anytime. The only one small challenge with the fair plan is that you will not be able to buy it yourself. You will need help from an agent, and I'm always there if you have any question how to navigate the fair plan market, or for any other options that you may have for your home, whether it is cancelled or you are going for a new home. I'm always there. We are always there to help you with any question or concern. But Nagraj, yeah, Fair Plan is something that can give you coverage for any kind of home, no matter what the value is, no matter where the home is located.
Okay. Listeners, myself, Bay Area Realtor Nagaraj Annaiah, and I'm talking to Subrata Shah today. We are talking about very important on the home insurances, and the auto insurances are going so pricey right now. How do you go about it, right? Like, what is the alternatives for the high rising more rates right now, right? What is your alternatives? So we're discussing about that, and if you have any questions, you can give us a call. Our studio line numbers are 877 Bali 92. So one of the thing, right, like Subrata, like a lot of when they're buying a house, they try to shop around with the different home insurance companies. Okay, but what is the most common mistake? The one who provides a lower cost, or the quote is the better insurance provider, or what are the minimum things they need to be looking for?
So that's a great question, Nagraj. I think as a realtor yourself, and as an advisor to your clients, right? Even for me as an insurance agent, we would never recommend to go and compromise on your coverage. That's the number one need that you should have, and that you should look at. The coverage should not be compromised. Now, I do not want to talk about the pricing. It depends. It varies from company to company, although there are not enough companies providing insurance these days. However, the most important factor that you should look at is the reconstruction cost of the home. So it's called RCE, which is mandatory for your mortgage to look at. You are getting 100% reconstruction cost coverage on your home. So it's called RCE, and as long as your reconstruction cost is covered, I think you should be good for now.
Okay. But if somebody wants to buy a single family home or a condos, right? Why the home insurance? What are the two different types of the insurances?
Sure. So
How the price is about?
yeah, so there are two very common types of insurance are HO3 and HO6. So HO3 is a homeowner's insurance. So when you have a single family home or a townhome or even a condo where you do not have HOA taking care of any risk, right? So you will always need a HO3. So which is the HO3, which is the complete homeowner's insurance, no matter what the risk, no matter what the event that happens in terms of claims, the HO3 will cover everything as long as it meets the criteria of the insurance coverage.
Okay.
Now, the other type of very common insurance is called HO6. So remember, it's HO3 and HO6. HO3 is the homeowner's insurance, and HO6 is where some or portion of the risk is covered by your HOA. So basically, if anything happens outside, and it is more appropriate for an apartment, not for a single family home, there is no HO6 for a single family home, or sometimes even for a townhome. So HO6 is more appropriate for apartment where the HOA is taking care of the outside of the home, like the walls and the foundation and everything. And your HO6 is taking care of anything that you have personal property inside the apartment.
So that is why, listeners, myself, Bay Area Realtor Nagaraj Annaiah, and I'm talking to Subrata Sir, and today we are discussing all about the insurance, home insurance, and the auto insurance, and even the Bay Area mortgages. Like, if you have any questions on the Bay Area real estate, you can give us a call. Our studio line numbers are 877 Bali 92. We're still taking a call, so you can give us a call if you have anything concerning for you. So one is the HO3 versus HO6, right? Like HO6 is more for the condos.
That's right.
Correct. But HO6 only covers for the interiors.
Interiors. That's right.
So a lot of folks, when they're buying a house, like especially a condos, they think the HOAs are high. It is not worth, but it's still worth because it's covering your exterior.
So, there are two things, right? So HOA is different than HOA covering your home insurance, like home coverage, right? So HOA, let's say if you buy an apartment in a complex, you pay, let's say, $200 HOA fee every month, right? So from that $200, the HOA actually pays for the insurance of HO6, the balance of HO6 that they are taking care of for the home, right? So there are two different things we are talking about. Right. HO6 is the owner of the apartment that pays for the interior coverage of the home. Yeah. And then HOA, which takes care of the exterior coverage of the home.
Yeah. So that is why that is the reason the HOAs are sometimes in some communities, right, are higher because they maintain the exterior, they might be maintaining the roof, or they might be maintaining the swimming pools. So that is why when you're buying a HOAs, be careful what is the balance amount the HOA community has. That is very important, and that's a good indicator. As the insurance providers, do you look around the backgrounds of the HOAs companies, or you don't care about it when you're getting the insurance quotes?
Yeah, please note, Nagaraj here and the listeners, that you will go for a HO6 only when you read the HOA paperwork very clearly, and they specifically mention that they will do the coverage for the external or parts of the home. Then only you go for HO6. Otherwise, you will always need a homeowner's insurance or a condo insurance, which is the full insurance that you need for your home.
Yeah, yeah. That is why always the HOA papers, right? Like, or the HOA documents needs to be carefully reviewed before buying the house. So that,
Absolutely.
yeah, because that gives them the clear indication what are the breakdowns, and how much is the funds the HOA has it. So that will help them out, correct? So, and one more thing, like, just want to touch upon, right? Like, since the insurance prices are so high, we discussed about the building cost and everything is going up. That is one of the major, right? But somebody wants to reduce the price, home insurance price. How do they plan for it? Like they plan for the next year, or like for any improvements can be done in the house, correct? Can they basically show it as the, for example, if the fire sprinklers are installed, will that reduce the prices?
Absolutely, yeah. So as I said, there are a few factors to look at. Number one, so when you look at a homeowner's insurance, there are coverage called A, B, C, D, right?
A,
So
B,
the
C. Mhm.
dwelling coverage is the A. Then your coverage B is the exterior for any additional structure that you have in the home. Then your personal property, so on and so forth. So the coverage A, B, C, and D, most important is the coverage A, which is the dwelling coverage, right? And then you might see that there are a lot of the coverage which are probably put in as a safety net. For example, extended replacement cost, which you may not need because now you already live in the home, or you are trying to close a home at the at the optimum price. So you don't necessarily need an extended coverage all the time. So you can skip the extended coverage for now if needed.
Okay.
And then the other thing to look at is the deductible. You can always like check and balance the deductible that you have. And
Mhm.
number three, most important, which you mentioned, is that any extra safety measures that you proactively take from for your home. For example, if you take a those devices which like the
Yeah,
Xfinity Home,
water. Yeah, water stuffs
or
or
or even the water leakage device. So those devices, again, the fire alarm. So these things would definitely add discounts to your
I think the fire alarms is a good point what you brought in, Subrata. Like, fire alarms are so expensive to even basically install. Right
yes,
now, in one of the commercial property, whatever the redoing we are doing or remodeling we are doing, fire alarms will cost you $40,000 for a 5,000 square footage. It's if it's in a commercial, 20,000 for each buildings if there are two buildings. Okay. And fire sprinklers, the costliest part is not the installing the fire sprinklers on top of the building. It is basically getting the plumbing line from the city line. You need
exactly,
a
yeah, yeah,
separate plumbing line for the fire sprinklers, and that needs to be calculated based on the water pressure what the city is giving it.
that's right.
So based on that, you design your fire sprinklers, and to get in it from the city's line, it will cost you for depending on a 50,000, 60,000 for one plumbing line.
Exactly, yeah. And also it depends on what kind of what kind of fire alarm that you have. One is the self monitored, so which means that it will self monitor. It will tell you if there is a hazard. And one is the professionally managed fire alarm or
Yeah.
burglar alarm. So which means that anytime there is something, it will automatically trigger a call to 911, right? So
911.
those are even more expensive.
Yeah.
But it is giving you absolutely, like you can sleep, in the night
Peaceful.
with peace of mind. And again, I think I will take the opportunity to mention here that for a lot of the homes, especially the high value homes or very old constructed homes, nowadays a lot of companies, sometimes including some of my providers,
Mhm.
need some of the devices as prerequisites. For example,
Okay.
the water leakage, it's called mow and flow. I think it's definitely good to have a device for everybody, but nowadays that has become kind of a mandatory for you to have in order to get home insurance.
Okay.
So what? Yeah,
Yeah, listeners. So we have another couple of more minutes left. I would like to mention a couple of things. We are going to have a Bay Area Real Estate Connect event this time. A grand, better, lot of speakers out there. The day for the Bay Area Real Estate Connect is a days December 7th. 11 a.m. to 3 p.m. It would be in a Shubham Halls in Sunnyvale. Note down the calendar, like it's December 7th. Subrata would be there. A lot of investors would be there. Like they're going to talk about the mortgage options on all the commercial stuffs, and how do you tax guys will be there. So it would be a lot better event. Just a bigger and better event. Okay, it would be on at Sunnyvale, Subham Halls, 11 a.m. to 3 p.m. Note for it. And for the registration, I will send out the links pretty soon. You can register at nagarajhomes.com. We'll upload it in pretty much soon. And the second thing is, Subrata, like recently, one of my clients, since you were mentioning a syndrome on Dublin, like last week, one of my client went into a contract in Dublin. That
Mhm.
for a 1.92 million. It was listed for 1.7, and we went into a contract for 1.92. Yesterday night, we went into a contract. It's a beautiful house, four bed, 2.5 bath, close to 2,000 square footage. If somebody wants to buy a house anywhere in the Bay Area, they can always reach out to me. And if somebody wants to reach out to you on the insurance, how they can reach out to you, Subrata?
So yeah, I think we are known as you know, Nagaraj, we are known as Insure Pal.
Okay.
So I'm your Insure Pal, or anybody that needs any help, and for any question or concern, you can always call us or just text us. The number to reach us is 925 973 9031. Once again, remember, I'm your Insure Pal, and the number to reach at is 925 973 9031.
To reach out to me, go to nagarajhomes.com, click on a WhatsApp icon, and you can reach out to me. And all these videos will be uploaded into my YouTube channel, Nagaraj Annaiah. Do subscribe for the latest real estate news. Thank you so much, Subrata, and all the listeners out there.
Absolutely. Thank you so much, Nagraj.